All right. So we're starting off early Friday. Uh, can't really tell what's going on in the market. Don't really care, but we'll take a look here because people like to look at numbers. Looks like it's flat on the futures, on the ES, the NASDAQ. It's up a little bit, but who knows? You know, there's always news coming out on something. So we don't pay attention to that. If you followed us for any amount of time, you realize that news means really nothing to us. Definitely end of the month, should be some profit taking going on. You know, people closing out some positions, readjusting their portfolio, especially the big, hedge funds and institutional investing. Excuse me. We're raining hard here today in mountains up in Georgia. But yeah, it should be. We'll go down through. It doesn't look like we're getting paid any dividends today. It looks like, yeah, zero dividends coming in. We only have one dividend paired that's going ex-dividend today. That's TLT. That's the bond. But we'll take a look down through here. We still have about a half hour before the opening, and everything's pretty flat in our portfolio. As you can tell, there's nothing really moving. I did notice one jump up in one of these. We'll see if it holds. See if I can find it. I can't remember which one it was, but it gapped up substantially from yesterday. I don't know what the news was. Doesn't really matter. If you were in it, you can partake. Where the heck did that go? There it is right there. EVR. So if you had that in your portfolio, we had bought it a couple weeks ago. Just got a small, one share position in it, but don't know what drove it up. Don't really care. Dividends come in, great. But yeah, we just go down through and look, see what we had as far as our trade log this week. This is a running 7 days. If you look up in the top corner, it's a 7-day total. And these are the buys. You can see them where they're. I'm highlighting them there. But these, we don't take any losses, so you won't see the red. If we do take a loss, you'll see it in red. Now, somebody asked me, emailed me, so how do we know your accounts are real? I was like, well, you can either watch for a little bit of time, try to figure it out, or you can look at the size of the accounts. All right, so we get 20,001. Most of your accounts, they start you at $1 million, right? Or whatever number you want to put in there. I'm sure you can, fudge it if you wanted to. But we put these trades on live, so the only ones that you don't see are between, when we get off in the morning until we come back in the afternoon. We have other accounts that we have to play with, so we can't dedicate our entire day to showing what happens on small accounts, but we can show you how to manage your money. As far as you picking stocks, you can do the research, or we have scans that allow us to pick the ones that are have a better opportunity of performing. We're not interested in stocks that do not pay dividends. Everybody likes to look at charts, so we're going to continue to look at charts, but charts can be very misleading. All this information here, they can come in handy from the standpoint if you wanted something that was repeatable in your strategy on how to enter, but if you have a list of 10 things that you need to have as a requirement before you buy something, that would be a good start. You don't want to, anywhere between 5 and 10. You start getting any more than that, what ends up happening is you'll forget, unless you have it automated, to actually look for specific things such as, what's it paying in dividends, your time frame that you're looking at. Some people go way far at investing. We found it, over the years. Well, I found it over the years that it's better to invest in those stocks on a weekly basis. That gives you basically 52 opportunities, per year. Because if you're trying to do it on a minute by minute basis, you're going to drive yourself crazy. When you're working with leverage, which we don't do, we don't borrow money. This is money that I don't like what they tell you that you can't do with that. Like basically you're just like, okay, well, hey, I got $5,000 and I'm willing to lose it. That's what they're trying to tell you when you go into the markets, and we don't believe that. What I believe is that you take that $5,000, you're going to own that $5,000 for the rest of your life. But what can you do to make that $5,000 grow? I'm just using a small number. It's a more common number than to say, well, if you got $1 million, not everybody's got $1 million. So you got 5, 10, 20, 30, whatever the number is. That's the type of money that can be working for you. Just look at it as like you bought a house for $30,000. Now, I know you can't buy anything super cool for $30,000, but you can get rent on it each month, right? So, if you could buy a house for $30,000, it wouldn't be much of a house in today's market, but 20 years ago, you could buy a decent rental home, $30,000, fix it up a little bit, maybe it's worth $50,000. You could either sell it or you could, rent it at, but that's what we're looking to do. You never want to let that money go. Once you get a hold of it, you never let the market take it. So how do you do that? You got to break it down into smaller portions so that they can't grab a hold of it. You got to look at it like if you have one stock, the problem's going to be if something happens to that stock. I mean, you better have some really damn good research. Like everybody said, well, just go buy Coke, It's like, okay, well, there's nothing wrong with that. What's it paying percentage-wise? Let's take a look. Coke. Paying 3.2%, right? So I like to work with numbers. I don't really care what the charts say. We could just use this. And there's certain platforms you don't even use charts, but it's fun, if you're watching on a day-to-day basis, to use the charts. It's just a better visual than looking at numbers on a flat screen. You can change it out. You don't have to have bid size, ask size. You don't have to have all that stuff. You can change that all out, so it's just easier on the eyes. We use those for making sure if you're using limits, you don't have to worry so much about bid and ask, because you're not, you use a market order and you've got a big spread. Yeah, you could lose a good chunk of money depending on the size of your trade, but we'll get into that later. It's not something we concentrate on. So let's look at that. So let's say you had $10,000, right? And you multiply that by 3.2%. Going back to school. So you're going to make $320 a year. And people are like, well, heck, man, I can't make any money off of $320 just to stick it in the market. And I said, well, where's your $10,000 sitting right now? Right? Might be sitting in a CD earning 1%. So you're going to get $100. Right? So what's better is learning how to manage that. So you could take $10,000. Well, let's just move it up to 20. Let's look at the size of this portfolio here. Here's 120. Okay, size of this portfolio is we're just going to use 20. So you get 20,000, right? You're just going to multiply that by that 3.2%. You're going to buy Coke. That's what you're going to get each year, $640. If you're okay with that, $640. Divide that into the 20, right? Divide by 640. Take you 31 years to double that $10,000 if you do nothing, right? It would be less than that because of reinvesting. You know, let's just say you had the $20,000 and you put it in there and you're making your 640 a year. You take that 640 and you just stick it in a cash account. In 31 and a quarter years, you're going to have $20,000 if the dividend amount stays the same for the entire time. Doesn't matter what the price of the stock is. Okay, it could be $1,000, it could be $5. As long as it's paying you that dividend amount, that's what you're going to get. So, and it can go up. So a lot of people are looking at dividends increasing, but we're looking at a static number. Okay, so 31 years. So, well, you know, I'm 60 years old and I don't have, 31 years. What am I going to do? Well, at that point, you're looking at income, right? So the younger you are, the more you want to be investing in more stocks that pay you more dividends. So you're compounding that money. So you're taking that 640, maybe you're buying more shares in Coke. We're not talking a drip plan or dividend reinvestment plan. We're talking about buying it lower than what you paid for it before. You don't want to buy something for more than what you paid for before because now your average cost goes up instead of down. So in a nutshell, in 30 years, you're like, well, is there a better way? And say, yeah, well, now you start to trade it. Okay, so if you can make that 3.2%, you got that $20,000 at 3.2%. Now you start targeting a 3.2% move up in the stock price, and you take that $640 off the table. Okay, you get that early, or at least you're trying to. There's no guarantee that the stock price is going to go up. Here's where the problem comes in, focusing on one. Well, if it never goes up, now you're just limited to the $640 a year. All right? So that's why we spread it out. Because we don't know if, let's just say, what's Coke's price? Coke's price is 53.03, right? Let's look at the chart. So you say, okay, I'm going to buy it at 53. Let's just say you get it at $53. The stock price goes no higher, but you just bought $20,000. Let's see what that works out to. It's probably about 400 shares. So you had 20,000 divided by 53, so 377 shares. Say it never goes up, and just say it comes down, sits down at $47 for, I don't know, 5 years, and never goes any higher. Yeah, you'll get dividends. Looks like it's paying what, 1 cent more per share per year, or per month, or per quarter. So 4 cents per year. So it went up a little bit. So the idea being, if you only have that 20, sure, you might have that $640 at the same time next year, and you could buy more shares when it's below that price, and yeah, you have a better position. But to truly dollar cost average, you're going to need another $20,000. So if it's down to 47, to get it down halfway, just buying 1 or 2, it's not going to move your average cost down very much. It will be better for sure, but it's not going to be substantial enough for you to close that position for a profit. So we're looking to, compound our profits. We're not just looking to make dividends. A lot of people out there hand their money over to institutions, and they stick them in some fund, and here's your 3-4% per year. I just gave you the numbers on that. 3-4% is going to be about 30 years, right? Comes in around what, your mortgage. So your mortgage, you might have gotten lucky here in the last couple of years, get 1.8, I think was the lowest I saw, maybe 2%, somewhere around there. So you're only gaining 2%. Well, just extend that time a little bit further. You're not compounding your money fast enough and hard enough. So when you start looking at, here's what you can do. You follow these type of strategies. This is what we've done just on these 3 accounts. This is cumulative, right? So 3 accounts. I think they total up to 120, but we'll break down the smallest account and show you what it can make in 1 month. Just taking it easy, not forcing anything, and following rules. Okay, so it looks like we're at a total of 1624. So that's a cumulative total, right? Our profits so far through the month is 936, so it's outpacing our dividends, right? So if you look here on the chart, we haven't finished off. We're at the end of this month. We'll post this, or actually at the end of business today, we'll post this, to Twitter and whatever, so people can look at it, and you get a better understanding of how, if you just take that blue line off the chart, if you're not actively trading and managing your own portfolio, because nobody's going to do it for you, right? These institutions they're making the money off your money. They're doing what we're doing here. So we're trying to get better returns than just the dividend amount. So that's not bad, right? You're adding a third more plus. So if you're making, let's say, 8%, now you're making 8% plus 8% plus 3%, right? So you're getting 8, 16, anywhere between 15 and 25% is what your target should be. Warren Buffett averages 20% per year. You're saying, well, he's got all that money. It's a percentage is a percentage. He's using a strategy to make the money grow. He tells you to sit there and hold, but he constantly buys and sells. Well, at least Berkshire Hathaway does. I don't know what he does personally. But that's the only way that you can increase your dividend amounts. Now, you can go out there and buy companies like, where's that one? CES. If you're just starting out, these are good. If you're on a fixed income or you want fixed income, you need to look at things like this that pay you, high percentage returns, 13.8%. Now you need to, investigate all of these. I'm not telling you what to buy. What I'm saying is you need to be focused on your returns. 4%, that's fine. I mean, if you're going to trade it, that's you get that total amount in a couple weeks. That's what we're looking at. So let's just take this one for example. We're like, hey, can we get that to go up there and hit that? No, we can't force it to do anything, but we have a strategy. But we don't, here in this case, we're only buying 2 shares, right? Because it's based on the size of our portfolio and the amount of money or the max shares allowed based on an algorithm. So we have those type of algorithms that we've worked out, and there's several people out there basically they're saying, hey, just use a percentage of your portfolio on any one stock. So I couldn't tell you what the actual number is here because we use a different algorithm, but anything is better than nothing. If you don't diversify, you're going to get hurt. And this is what I talk about. We don't know if this is a high, right? You can see we just purchased this, right? The CMA. We just purchased this week. Did we? This week or last week? Which account is this? Looking down through here. Let's look at the other one. Yeah, see, we just purchased it on the 30th, so that was yesterday. So you can see we're not worried about whether it's a top or a bottom. See, most people want to buy it when it's down here. I'm not saying we don't, but it has to come up on the scan. Our scan allows us to look at a lot of different variables. We're not just, variables and metrics. We're not just looking at, well, do we think this is a good time to buy? Or, hey, it just crossed this moving average. Or, hey, we did this. Now, I'm not saying you can't do that, but you have to be consistent. We found something a little bit different. We use math, we're not using these charts. This chart is so misleading. Hey, you know, if you're over here, so oh, it's an all-time high, you know, back over here. Say, well, I'm not going to do anything, you know, I'm just going to let it come back down. Well, you missed out on all of this. You know, that's a 4 to 22, 64 to 72. I'm not saying that's the entire move, but what we're doing is we're targeting that dividend amount of $2.72. And you're like, well, so what? You're making $5.44. You know, but now you need to start multiplying. Use your brain and start adding up occurrences. We're trying to hit as many of these as we can each week. This is what happens when you do that. 1624. So we're not, you tell me how you're going to make any money by buying Coke, right? You're going to buy Coke at 53, right? Well, let's just say you bought it at 48 and you had 300 shares. What was that? Yeah, 377 shares. 377 times, right? Let's just say you bought it, let's say you bought it at, right here at the low. You got it at, let's see if it comes up. Yeah, low 48.11. So 48.11, and we'll divide that into 20,000. 416 shares. Okay. And you want to sell it at 53.07. So you got 416 times 53.07. Okay, so now you've got $22,077 from that 20. So you made $2,077. That's if you could pick that bottom, right? You knew you had some system, because it's easy to look back at this after it happened and say, hey, if I could just buy it right there, emotionally, you're sitting there looking at this, you're saying, hey, this is coming down. I don't know what it's doing. All I'm looking at is price. If it tells me it's a good time based on math, based on research, I say, maybe I get in, maybe I don't. But if you're just saying, hey, I can look back at this chart and look here, I could have made $2,077. Hey, if you can pick that top and you can pick that bottom, then you can make that. So when are you going to get at? What's your target price? How did you know it was going up here? When are you going to get at? These are all questions you have to ask before you even place a trade. We know on a day-to-day basis, okay? We did this, okay, if you bought it here at the bottom, say that's 1, 2, 3, 4, 5, 6, 7, 8. So it's two months and 1 week, right, to make $2,200. Here's 1 month, okay? 24 days made $1,624. Less risk, okay? We do this consistently. If you're a lazy thinker, you'll opt for the easy way out. You have to manage your own money. Unless you want to pay somebody else to do it. There's nothing wrong with that. I mean, we won't do it. But you can find plenty of people out there that will. They'll love taking your money. And we're only talking a couple hours each week to manage your own money. It's like if you watch any amount of TV or you're on your phone at all, it's as simple as putting in an order. That's all you have to do. It's clicking a button, managing your portfolio. But you have to learn the system. If you don't understand it, you're going to go for the quick hit. You're going to be like, hey, I've heard options. You can make money on options. Like, yeah, you can also lose money in options. It's a 50-50 game, and it's not tilted in your favor. It's kind of like the casino, you know. You'll win some, but you'll lose some. If you walk out as a winner, you might get a free dinner, and you'll feel good about it. That's entertainment. We're not we're not looking at this as entertainment. We're looking at this as a serious, hey, I want to have some money when I retired, but more so, you want your money working for you versus the other way around, you working for the money. So I know it's a hard road if you have a small account. I mean, we all started somewhere. You know, I've been doing this for 20, 27, 28 years. But you have to start somewhere. And I show these small accounts because I want to show people that it's possible, that you can grow these accounts. Don't poo-poo the number of occurrences. And if you're all hyped up and you want the flashing bells and you want to watch Jim Cramer, I was like, you know, he seems like a nice guy, but everybody's got an angle. This Friday, I think, is going to be kind of dead. Not much going on. But then again, what do I know? I have no idea which way the market's going. And that should be the number one thing you tell yourself every time you open up a portfolio. You look at this, you look at it and say, hey, this stock here, Med, it's priced out at $213.65 right now. You have to know, number one, why would I buy it? Number two, without looking at the chart, do not look at this chart and say, well, I think as soon as you start doing that, you're going to make a mistake. You should be, first off, it's like, does it pay dividends? So if we look at, was it Amazon? There's no way I'd ever own Amazon unless it pays dividends. I don't see any dividends on that screen, right? So you're looking to make a move. Okay, I'll buy one. So if I want to make $100, it's got to go up $100, right? You buy 100 shares, you get a 300 grand. So what do people do? Well, the only way I can trade that, and I'd love to trade it, is I trade options. And that's how they get you. So if you're going to trade options, you need to really learn it. It's at least 6 months to get a really good foundation under you, and do not use real money. Find a platform that'll allow you to paper trade it and see if you can make any money. But the only way you're truly going to understand if you're new to markets is to trade real money. And you do it small. You start with investing, not the other way around. If you start investing the money, you grow it. You want to take chances down the road, that's on you, nobody else. You learn it before you mess with it. The nice thing about investing is you can be wrong and say, well, hey, like if you look at this one, you know, our average cost is $36.25. This is a CEF. This pays monthly. So we're like, well, whatever, you know, if it goes down, it goes down. You get to collect each month. 17 cents? Yeah, they just moved it up. So it's a fairly expensive CEF, but what's the price? It doesn't matter. As long as you're making that percentage. Now, percentages always change. Price goes up, yield goes down. Dividend amount is what you're really looking at. But don't fall into the trap of following dividend percentages. And you'll figure that out the more you listen to me. Dividend percentage can fool you. You see, we've been in this position for quite some time. We bought it back over here somewhere. Well, dollar cost averaged into it down. We got to the bottom. That's why you don't see any of these other lines, because the only way we can buy this again is if it comes up on the scan. We've already exhausted that part of the strategy, so the strategy starts back over now. So, I mean, it's going to do one of three things, right? The price is either going to stay the same, it's going to go up, or it's going to go down. You make your decisions off of this information. You don't base it on, hey, here's a line. I'm going to buy when it crosses because that, what is that? That's hindsight. It already happened. Had you not had that line on there before? I mean, if that's what you want to do is use, what do they call them, trend lines, then go for it. You know, it's like, if that's your thing, then use it, right? But you have to be consistent. But the trend lines aren't going to tell you when to buy and sell. You know, it's like, oh, you're going to buy when it's a certain percentage over that line, when it closes over that line. You know, what other indicators are you going to use? You know, I wouldn't go with any less than 5 different things if you're going to get into the technical analysis. We don't use them. I have and played with them in the past. I just never found anything very consistent. But, you know, you can say, oh, okay, well, hey, I'm going to buy every time there's a down bar. Well, these are weekly bars, right? That'll add up quick. You know, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, you know. There's all kinds of different ways you can get into positions. But then it starts adding up, right? Oh.
Filled.
DOX. All right. Sorry about that, but we're open. So looks like we just went long on DGX. So we'll figure out where that one's at. We'll get off of this classic, or go to classic. Looked like it was there. Must be on one of these others. There it is, DGX. So we'll do our same thing. We're targeting our dividend amount. 130.01 plus 248. And we're adding $1 for our commissions. And we close the entire position. 139. Oh, it seems high. What the heck? 133.50. All right, so we'll go take a look at the chart. And you can see the distance from the top of that triangle to there, right? That's $1. That's our commission. Right? If you're on a different platform that has 0 commissions, I mean, you can use Interactive Brokers Lite version, and you won't get all these fancy stuff. But I've been with them so long that, you know, I'm not going to give it up. I mean, it's just $1 doesn't make that much of a difference to me on either side of the trade. So you have to work it into your price. So we just add $1 to it. But now we set up where our next buy is going to be. And that's all it is. We have our target price. That's where we want the price to go so we can get out. And that would be a full year's worth of dividends from here to here. That's all we're targeting. All right. If it goes against us, comes down, and we dollar cost average into our second position, right? Or a second share. Because right here we have max shares of 13. This is an algorithm we came up to protect our account sizes. So it's scalable. This is what we're looking at, being able to be scalable and not put our entire account at risk. Everybody's scared to death that the market's going to come down. Like, oh, it's coming down tomorrow. We don't know. We have no idea. All right. So pretty quiet on the open, but we can take a look and see what's going on. Let's go over to Mosaic in this account and see what's going on. It looks like we had a little bit of a push. What we're looking for is something that's getting close, not that we're going to change anything. As you can see here on this med, this one moves quite a bit. You know, just paid dividends, I guess, came down and hit our 50% retracement because this was our initial at 275. So we bought a second share at 207. And just like that, right? It took it 2 months to come down to this price. But had you bought 100 shares up here, guess what? You know, you have to have a good size account to partake in this, or you're going to trade options. And if you have, you know, any sense, you'll know that it's next to impossible to win at options. You have to pick a direction. You got to be right. We don't pick direction, so we don't have to be right. In this case, it came back down, went through our position, or went through our limit. We picked up another position, and we're on our way. You know, we don't know if it's going up, but look at where our target is. Target's here instead of up at 285. It's the same amount. The distance between our average and our sell limit, the difference is now we're selling 2 shares for the amount of the dividend for the year. Now we're probably going to have to change this, right? Because now it's 142 versus 113, but we'll worry about that when it gets up there. It's not a big deal. You're talking pennies. So let's go down through the list here. So that was Med, PBT. It's been in there a while. We're just waiting for an alert to hit. You know, if you're at work, you have it on your phone, you don't have to worry about it. You just go to work, do your thing. And the nice thing is prices don't move so rapidly that you're going to be freaking out like, oh, I got to get this order in. You can wait till after work. Just check your email, you know, or set it up. Just open your account. Say, hey, what hit today? I've got customers that work all day. They don't have access to a phone, or not allowed to have their phone, whatever. You don't have to do this all day long. I got stuff I got to do, appointments I got to go to. Get on here, look, say, hey, what do I want to make? I know what I have my strategy down. I know my money's going to grow. You know, just no FOMO. And RJ, what is that, RJF? Now, if you can tell me that that's going to close, you know, then you know something I don't. I say this every day. It could go up there and never hit that number. We don't care. We're just looking at it, right? You can feel the market. Is that going to close today? I have no idea. Is it going to come down? I have no idea. It could stay at 49.75 for the rest of the day. It could be there for, I don't know. They could just stop trading altogether. It could just be stuck there. You know, it's within 20 cents of closing. Do I care? Nope. Because if it doesn't, right, and go back there, if it doesn't, I make 44 cents, right? It just keeps on paying me. It doesn't matter what that stock does. I'm getting paid. There's another one that's going to pay. This is the only one that's paying today is TLT. A little slow on the uptake there. SNLV. Yeah, what's today? Wednesday? Yeah. I gotta post. What was that one? DGX. I need to post that to Twitter. Need some followers over there. I forget about it. It's always fun though. People get all wrapped in around the axle.
Filled.
Oh, boy, I just clicked on that at the right time, didn't I? RJF. No, I don't have a crystal ball. So we'll get rid of all of this stuff on there. Let me go over to Classic so we can look at it. RJF. Just paid dividends this week too. Just copy and paste over to Twitter. But overwrite it because we had a buy-in. I think we bought that somewhere on another account. And sold RJF. And what was the percentage? 1.2%. That's a low one. But it's another occurrence. That's all we're looking for. Another occurrence. Every time you sell something, your kitty grows. You're like, well, you can see still got about 16 grand sitting here on the sidelines in this account because we've been selling, right? Been taking in cash. Going around, just collecting rent. That's the way you got to look at it. So let's go back over to Mosaic and where's that? RJF. Try to keep your position on here. This is constantly changing, if you can notice. I'm just looking to see. This is what I like about Interactive Brokers, because I'm not paid by them. I'm just saying that I've been using them for over 25 years, so it's pretty responsive. Every once in a while you get a little glitch in there where it's like timing out or whatever. It's just there's so much activity. It could be your internet provider, it could be any number of things, but you don't want to get caught up in this, day trading garbage, because to get good at it, I'm sure there's some people that just really, I can't sit in front of the computer all day. I just can't do it. It's like I want to in and out, get my orders in, take a look at everything, and then go do something, because one of two things is going to happen. You're either going to enter a position or you're going to get out of a position. And if you have a phone, alert hits, it tells you, it's like, hey, do you want to put the order in? It's like, yes or no. It's real simple. You don't have to sit there and look at the chart and guess, is it going up or is it going down? Who cares? We don't care what it does. What are we on there? Lamar? Where the heck is that at? Lamar. Oh, it's right at the bottom. LDP. See, we got quite a few, and we like to have in all of our portfolios a good amount of CEF, closed-end funds, because they pay higher dividends and they don't move much, so you're going to get paid consistently. The bigger the account, the more you bring in. I mean, it's simple math. But you have to be, if you have a small account, you need to be patient. You need to, first off, you need to try to get debt free before you start investing. Doesn't matter what you make in the market. People are like, well, I need to make 1,000%. And it's like, well, I guess you're trading penny stocks, huh? Because it ain't going to happen any other way. And penny stocks is a losing proposition. Some people swear by them, but you think you can do it, have at it. Right. Yeah, turn that volume down a little bit. Blow me out of here. So, PPG, let's see where that was. Got to look at the scan to make sure that it's actually on the scan. Okay, let's go back over to Classic. Get the chart up here, PPG. Yep. PPG. All right, so it looks like we can probably get into this, but we're going to, in this case, we're going to trail it. And my little puppy come up here to see me. And we're going to trail it by 196, but we're going to put the max shares up here. All right, and max shares change. Okay? They don't stay static. I mean, you can see it stay static, but they do change. And they don't change quickly, so by for some reason I can't get this to change, so we only have one. I'm going to trail that. But what did I say? 196. Okay, so that order's in. We forget about it. It doesn't matter. You know, you can go down through here and look at all the pending orders, right? Let's get it alphabetical. So we have some limits in. Say limit. Let's see how many trailings we have. Trail 1, 2. We only have 2 trailing orders in right now. It's just the nature of the beast. If you understand what you're looking at and understand that you're only going to buy either on a pullback or on a limit, a lot of times the reason, you know, people, I'm not letting anything out of the bag here, but the reason why I want to buy something, shit, where are we at? Like this one here, the reason why we want to do it on the pullback was because we don't want to catch at the top. It's not a big deal if we do, but I want to try to get it as it's coming down. That's why I use trailing stops, just to get a better price. Because we don't know, you know, price is price. So, I mean, 125 is better than paying 127. I mean, it's just common sense. Some people's like, well, what happens if the end of the week comes and you still haven't got that position? It's like, well, if a trailing stop in, it's good till canceled. So it's just going to keep on following it down. Now limits, I shut my limits down because I'll more than likely, let's just say the price was down here and it came up on the scan, and instead of putting a trailing in here, I would buy at a limit, right? Because I'm already down on the price. I don't know if it's going to go down, but it's just been my experience based on what other people are looking at, right? That the more strength is going to come into the market based on this. When you see these bars, you're like, well, chances are, I don't know that that's the bottom. That's why I don't go all in down here. I use the same risk management on every portfolio. Okay, it's just different for different size portfolios. That's the only difference. So it's the max shares are different. You know, the percentage of the max shares that you can invest. So we're just concentrating on under 100,000 here. Once you get over, if you've got more money than that, I'd be more than happy to show you how to, you know, scale that up. It's not a big deal. It's just a numbers game. And you still protect yourself. Yeah, I'm looking at the wrong chart. There we go. Yeah, I need to cancel that order and just put in a, because it's so far above, you don't need that money sitting there on a limit. So we know where the limit is, and you know, if it's going to come down and hit it, we'll get an alert first. So one day the market will finally come down and you'll be able to see what we do as far as managing. We don't close positions for losses. We're going to, anything that you see when this market crashes, we'll end up holding if we still have it. So we don't know when that day is going to come, if it ever comes, you know, so why worry about it? It's going to do what it's going to do. But if you have good risk management skills and you're not pumping all your money into one, and you're spreading it out, and you're taking the size profits for the size of your account, you're going to see the gains. But if you're trying to go for home runs, you're probably going to strike out a few times. It's just the law of averages. So RJF is 314. Yeah, so you only have one buy, one sell on that account. Nothing on that. Oh, we do have another RGF sell. That's interesting. I wonder why that one was so much lower. Oh, because it's one share versus two. Two separate accounts. That makes sense. Sold ATO yesterday. Yeah, interesting. Yeah. Cool. So we got in and that RJF pretty quick. Yeah, I think we bought it yesterday. I don't know where we bought that at. Must have been last week or something. Doesn't really matter. It's done now. So we'll go back and clean up those charts because we don't want it messing with us. Okay, so that one's there, and this one should be over here. RJF. Yeah, we've traded this in the past. That's why it had, yeah, multiple, if you looked at it. So yeah, we closed out of that. Move all Fibonacci. Okay. So there, a nice clean chart, right? And we can go back and look. Is it in the portfolio? Yes, it is. So we can, on this particular account, we're going to put our alert back in. If it comes down and hits it, we'll make a decision on what we want to do. Matter of fact, we're going to move that down to the pivot point, which is 121.33. Perfect. There's no magic bullet here, just consistent profits. That's what we're after. So overall, let's see what else we got. EGM. Yep. Who knows? Is it going to go up? Don't know. That's why we're in the market, because you have to be in it to play. The only way you can collect dividends is own stock. Once you figure it out, the pressure comes off and you make better decisions in your life. The markets have been around for a long time, and the markets are going to come down. A lot of people are going to get hurt. Don't be one of them. Don't get FOMO. And don't think you know where the market's going, because nobody knows. Huh. Here's a little lottery ticket. There's no rhyme or reason to owning this, but you can see I've got a limit up here. I'm not willing to take any less than $10, right? So 10 times 100, that's $1,000. And then what did I pay for it? 50 cents. So 50 bucks is what I got wrapped up in it. I'm up $29. I'm up 50%. See how it can mess with your head? I'll just sit on that. Just one that was a different company, ended up going to the pink sheets. We don't care. It's not paying dividends. can close that right now and make that 29 cents. But here's the deal. If I own it and it goes to 10, what's that percentage win? Like 600%, right? You could say, oh, I'm going to wait for it to go to $100. It's like, well, you might be waiting a long time. Yeah, pretty dead. You know, yeah, the market's really not. I mean, it's definitely positive, but it's not crushing it or anything. We'll see what happens. Somebody's supposed to talk this afternoon. I think Biden's supposed to say something about something. That's how much I follow it. It doesn't matter to me. I have rules. I do what I'm doing. I'm taking money out of the market. That's what we do. We collect. We're like the collection agency. It's like, hey, we see that we own some shares in your company. You need to pay us. Yeah. And today, the only one that's paying us is TLT. Well, at least it's going ex-dividend. All right. So we made a nominal amount this morning on trades. It's a Wednesday. It's the end of the month. Whatever happens, happens. You know. So we're up on the month. You know, if you've been following our trades, you'd be in the exact same boat. Right? Or whatever you do, it doesn't really matter. So, yeah, we only got about 5 minutes left, so we'll just sit back and monitor on Mosaic because it's easy on the eyes. I don't see anything. I like to look at the ones that have big moves. You know, anything over $1, I like to look and see what's going on. All the rest, it's like, well, we already know what happened there. Oh, there's one 441. Yeah, that's the man. That thing moves a lot. You know, if people start strategizing, it's like, oh, I'm going to do this with it. I'm going to do that with it. Like, yeah, whatever. Have fun with that. Stress themselves out. EGP. Let's see where that's at. Do we even have that? Oh, yeah. It's been traded before, so we'll take a look at the chart. I like to work in classic when it comes to that, but EGP. Okay. So it's already below. If you see these little ticks on the side, I use these as reference sometimes. In this case, we got a pretty good drop on EGP. Just paid dividends. I don't know when it did. 29th, a couple days ago. So now it's coming down, 143.69. Okay, so we're going to, this is supposed to be 11. So we're going to change that to 11. Change the font size. Let's move that to 12. And now we're going to just make sure I don't buy that twice on other accounts. And bring it down to 286 by 1. Oh, so there's another trailing. This is my own personal. You could buy it right now if you wanted to, you know, and this is just a personal thing that I do on these small accounts. This one is fairly flat, so let's just say it runs back up there and hits it because this is a trail. Runs back up there and hits it, then my average cost would be 146.39. So then I'd be looking to about halfway in the 6-month window buy again, and then at the bottom, then we go back to the scan. That's a simple, my simple strategy that I show people so that they can understand that they don't need to be buying, thousands of shares of things to be interactive, especially when you have no fees involved in trading. You can make money. And I'm even paying $1 on each side. If I can make money paying $2, to in and out round trip on the trade, then you can do it not paying fees. But yeah, we're trying to get an ebook together to explain it a little bit better. As I know I can work a little too fast, and sometimes it's a little hard to get your head around this. I understand that. I've been doing this for a long time, so. But yep, that's pretty much it. Coming up on the top of the hour, and we'll close it out. I've got some errands to run, and I'll be back this afternoon for the closing bell, which is 3:30 Eastern. I got to start saying that because everybody thinks I'm Central Time. Used to be, but now I'm Eastern. But go do something, get your trades in, and go do something else. Don't sit there in front of your computer thinking you're going to make something happen. It won't happen. But anyways, have a great day and try to stay dry if you're up in the East Coast, because it's raining like cats and dogs. Later on.